The shareholders are going to be listening pretty closely when Warren Buffett discusses two of the company's newest holdings, HP Inc. and Occidental. Berkshire revealing its stake in Occidental in March, thanks to reporting that we did about some of these things, and then the HP position earlier this month. Joining us right now for more on both of those holdings is Mark Cash. He's Morningstar equity analyst who covers shares of HP, and Stephen Richardson is ISI senior energy analyst covering Occidental. So, guys, let's walk through some of these things because these are some big bets, billions of dollars that they put down in each of these stocks. Stephen, first up, the best performing stock in the S&P 500 year to date is Occidental. It's been a huge performer, and a lot of that came after Buffett revealed his stake, but it's also just due to energy prices. What do you think about the stock right now?
I mean, I think it's, the context here that's really important is that Berkshire came in to fund a major acquisition the company did in 2019. So it was already owned already owned preferred shares. And the March holdings you're talking about is when they came in and bought the common stock. And so, I think it's kind of a vote of confidence in the outlook of the company. Obviously, we're in a more inflationary environment, higher oil price, which really flatters the results here. But I think it also just speaks to the duration of the investment that Berkshire was looking for as they moved out of the preferreds into the commons. And I think that's really the prime issue here. This was a company that levered up to make an acquisition, and so to the extent that the value creation here for common shareholders has really been that deleveraging cycle, which obviously accelerated massively with $100 oil. And so, we're really still, very quite constructive on the stock as a result, primarily because we don't see that imminent pullback in oil price. And, that deleveraging cycle is very accretive to common shareholders.
Hey, Steve, Buffett told us when he bought the stake, he did it because he listened to the conference call. Or I guess he read through. He printed it out, took it home with him for the weekend, and read through the entire conference call in one of their earnings reports. It said that Vicky Holub, the CEO, is doing everything right, running the company the way he would run it. Do you agree with that?
I mean, I think I do, from the extent that the story since 2020 has been a very methodical approach to deleveraging the balance sheet, de-risking the outlook, focusing capital on the areas that matter. Occidental has got a very interesting, chemicals business that's really in one of the more attractive parts of the chemical chain. Has a midstream business that positions it very well for a pickup of U.S. oil exports, is what we're seeing, and also a huge position in the Permian that Vicky, in her previous life before becoming CEO, ran. And so you've also got a CEO that really understands, the situation on the ground in West Texas. And so I think all those things, and if anything, when we speak to the company and to Vicky, that what we hear on what Berkshire wants, which is always a question people ask, is keep on doing what you're doing, which I guess is a very common refrain with big Berkshire holdings.
Hey, Mark, let's talk a little bit about HP, because that is one that has people a little puzzled trying to figure out what Buffett sees here. And the big question has been, is this another investment like Apple, where Berkshire has done so well, or is this more like IBM, where Berkshire did not do well? What do you think? Because you're underweight on this stock right now.
Yeah, sure. Thanks for having me on. Great question. I think what this comes down to, if you look back to 2020, when Xerox tried to take over HP, as part of thwarting that plan, HP laid out a $16 billion shareholder return plan. They said, hey, we're going to return all our free cash flow to shareholders. We're going to, they've bought back like 25% of their market cap over the last 2 years. They've raised their dividend to $1. It was 78 cents last year. So it's all about returning shareholder capital, and we think that's what's attractive to Buffett here. So it's really, it's not a high-flying tech name. It's more of a steady company, but it's going to return capital. It generates solid free cash flow. So we think these are probably attractive things to Buffett, and that's the great question: is this going to be an Apple? Is it going to be IBM? And our expectation is that he was probably building a stake at a great time when you're getting a bigger stake as capital is or shares are bought back. But also, PC demand was at record highs because of the pandemic. And so absolute record demand, basically no pricing pressure because supply chain constraints. And so what we, when we look at our kind of long-term view here, we think the party's got to end at some point. supplies are going to normalize, supply chains are going to normalize, and pricing pressure will come back. And so, we expect, longer term that, the stock may face some pressure because of this normalization that we expect to occur.
Shepard Smith here. Thanks for watching CNBC on YouTube.